welcome back to episode four of Beyond the Best, Series 2. Very excited to be back.
Back in your comfy chair?
I am back in my comfy chair. It's freezing cold outside at the moment, but extremely warm in here. You can't see what's going on behind the scenes, but we've actually got a gas fire in the corner here, which is very welcome.
Warming the toes, keep
it is, yes, it certainly is. So those of you that are new to Beyond the Best and haven't seen it before, this is 90s podcast about innovation and about how you can use the power of innovation to be better than the best in the business. Not necessarily just looking at insurance companies, but certainly how the lessons that we learn apply to insurance. So today, Toby, we've got quite an interesting topic, actually, one that I'm quite looking forward to discussing. It is
peer-to-peer insurance.
Fantastic, peer-to-peer insurance. So this is one that I've talked about for, it seems like, the last decade. There have been a number of kind of players that have tried to get into this space and tried to develop products and services that are genuinely peer-to-peer. We've seen some toing and froing on it, but why don't you start us off by talking to us about what peer-to-peer insurance actually is?
Yeah, so I think it's one of those things, it seems very obvious, but there's a number of different models that people use in terms of how they do it, but effectively it's about a group of individuals from a similar community, and that doesn't need to be geographical, but with similar needs coming together to effectively pool their risk. So in almost all models, minor claims, they kind of fund themselves. So, if a group of 10 of us came together, if it was for bikes, if my bike broke, the community would fund it. And then to some degree, you might rely on larger insurers for big claims, but you might not at all. It might be kind of just the peer-to-peer model. The idea is that towards the end of the year, the claims pool is refunded across the kind of board to those who haven't claimed, so that there's effectively that value return on investment, because claims only need to be paid. And if there's no profit that needs to be made, it's a community model, it's peer-to-peer. There's a lot more transparency with it. Everyone can see where all the money's going, who's being paid, what the costs are. And it's effectively just, it's a trust-driven model, isn't it? I think when we talked about it earlier, you said it was, going back to where insurance came from.
Yeah, absolutely. And certainly the way that I've seen this manifest is it's based on the fact that the people that come together trust each other to kind of pool money, put it towards where it needs to go in the time of claim, and actually share in the, I don't want to use the word benefits, but share in the what's left over if nobody needs to make a claim. Actually, if your pool is successfully safe or doesn't need to make a claim, then actually it's not just a case of a shareholder pockets the difference, but actually you as a pool all benefit.
Yeah, I think it's got that social aspect to it, which we're seeing more and more in the business. So I think it's your turn as Statman today.
It is Statman Nicholas today. Yeah, that's right. So I'm just going to take a quick look at some of the stats that we prepared prior to the podcast. So the first one is about the rise in insurance premiums. Interesting stats. Between June 22 and June 24, the rise in insurance premiums has been just over 30%. I mean, I'm not shocked because I'm an insurance customer and I pay my premiums, but absolutely staggering. 30% increase in the last 2 years. And even though we're living in this kind of high inflation environment, it massively outstrips inflation, which I think is about 12% over the past few years, which is really just making insurance less affordable for a lot of households. Thinking about the UK in particular, and I know people from outside the UK listen to this, but there are surveys done on things like consumer trust here in the UK. And a survey that was done back in 2014 revealed that actually people's trust in insurance company is an average of 2.3 out of 5, which really indicates, at least on the scales that they use, somewhere between medium and low levels of trust. So not only is insurance more expensive, people don't trust insurance companies with their money. Thinking about the way that kind of, trust, and we mentioned trust at the beginning of this podcast, and it's just come up there a moment ago. Trust impacts people's loyalty with companies. And there was a survey done in 2024 that found that 81% of small insurance commercial customers that had a high trust in their insurers intended to renew their policies. So if people trust their insurance company, they're 80% or more likely to go out and renew. So yeah, I think it's super important to see how this kind of swirling mixture of loyalty and trust and actually people's insurance going up can kind of create potentially a need for some sort of slightly different model.
Sort of compound, isn't it?
Exactly.
Cost goes up, trust goes down. It just gets worse and worse and worse.
Exactly, and I think I'm just going to go on to give my final stat here on the size of the market. And when people have looked into, okay, so the model that's out there at the moment might not necessarily be working for everybody because people's premiums are going up, trust is going down, and you only see, if people aren't trusting their insurance companies, they're less loyal. Thinking about the peer-to-peer insurance market, which is slightly different, the value of the market at the moment, I'm just looking at my stats, it was $1.5 billion US in 2023, but that's projected to reach up to 9.2 billion by 2032. So a huge amount of growth potential over the next 7 or 8 years. So what I'd like to do, Toby, is thinking about the fact that there's an opportunity for a different model here, thinking about peer-to-peer insurance. Who do we think, when we look out into the market, does this really well? And maybe I'll caveat this by saying there are at least a few peer-to-peer insurance companies that I'm aware of that I think are doing it particularly well. But I've also seen insurance companies in the past that have potentially dabbled with the peer-to-peer model and not necessarily gone through with it. But I think the company you've picked today kind of demonstrate that there's a potential to make a real go of this if you think about it in a particular way.
Yeah, I think I like your point there, particularly around the kind of dabble but follow through. And I think one of the things this company that we're going to talk about, Friendsurance, and I'll explain who they are in a second. But one of the things they do is they have a conviction behind what they do, and they've gone for it. They've set this vision and they've pushed ahead. Friendsurance they're a Berlin-based insurance company.
Okay.
They were established back in 2010, and they claim to be the world's first online peer-to-peer insurer. Have the first online model for it. So peer-to-peer insurance, because what it is traditionally can be done kind of word of mouth in the community, much more kind of analog. But they've gone online, and effectively they operate a platform that connects people within communities to insurance providers as well to cover the bigger costs, and leverages their existing social networks to enhance the risk sharing and reduce costs within that. So they effectively kind of have found an approach that fosters transparency and creates this, I guess, collaborative insurance experience for people that they go through as a community rather than as individuals. By offering the refunds on unused contributions, they keep customer centricity at the heart. So the difference, and I think this is probably one of the reasons I think that they've made such a go of it and done it so well, is they're not trying to underwrite it themselves. They're a platform offering the service through other people. So, some of the insurers on there are offering existing products rather than having to tailor them. They're just choosing as and when they pick them out. But effectively, they're disrupting that traditional market of I go to my insurer and cover myself for risk A to say, we're going to provide a platform for us as a community to go out there and kind of chase it as a group. And I think, in terms of how big they are, they've got 150,000 customers on their platform. They're obviously small. They're not looking mass market currently, but it shows the appeal of that approach, that they've already got that traction within a short space of time. And equally, they've got 170 odd insurance companies on the platform, kind of showing the level of trust that these established brands are putting in it, and showing that. So I think they've done a couple of rounds of funding. It's about 15-20 mil that they've raised. But again, that's another party of investor confidence in a model that people traditionally wouldn't necessarily put money down on.
I mean, for me, I'm super interested in Friendsurance's model as a platform. I remember going to a conference back in the mid-2010s, which was kind of trumpeting the coming age of platform businesses. I don't think we've really seen it in insurance the way that I expected to see it in insurance. But I think Friendsurance feel like they're breaking the mold a little bit in terms of doing that. I also kind of like the idea that actually, you'll bring traditional players to the party whilst kind of mandating that they follow a particular model or a particular set of, and I want to use the term ethics carefully, but actually, there are some things that we believe in and some things that we believe you should offer through peer-to-peer insurance. And if you're coming to play on our platform, this is what we expect. So yeah, I mean, super interesting model and super interesting example.
Yeah, I like that point on, working with. It's not trying to disrupt and get rid of. It's trying to say, how can we use those strengths that align to our
Absolutely, yeah.
So I think with this, it's important to think, and we've spoken about it a bit, but how do you start thinking about guiding your vision if you want to get into this space?
So I think this is, I don't think there's ever an easy question you ask me, Toby. I think these are always quite tough questions. But I think you're right. And I think the answer is almost in the question that you've given me there, which is how do you start guiding your vision or developing your vision? We would say that having the vision in the first place is what you need to do, and developing that vision is the first thing to do. The way that we talk about this, and those of you that have worked with us previously will probably know this, and Toby, this is a term that you use a lot, it is about developing a North Star. So it's about understanding what are the scale of your aspirations? What are the things that you aspire to be? So if you were to look into the not very distant future, but if you were to look out there into the future, what does the state of your business, your organization look like? And how do we envisage that as a thing that we might wish to go ahead and execute on? And I know during this little period that we talk about some different questions that we have, we would normally say, are there tools or templates that you could use for this? I think when we've talked historically about developing a North Star, there are a number of techniques that you can use to do this. But I think even if you're not au fait with innovation, this feels like this is a relatively straightforward thing to do.
Yeah, and I think you're right, because I think you can put science behind it, you can help, but at the end of the day, it is about being able to share and communicate it as much as what the words you choose and the way you express it. That for a lot of people, this is an internal mechanism. It's not necessarily something that's out there. It can be refined to do that, but I think you're right. Anyone can pick this up and chase it.
Absolutely. And I think particularly when it comes to peer-to-peer insurance, you're going to want to have some sort of aspirational state. So if I was a traditional insurer now looking at how do I launch a peer-to-peer insurance product or service or platform or whatever that might be, just saying we're launching a peer-to-peer insurance product isn't enough. I think the North Star would be something around, we imagine that we're going to have X number of customers and all of those will be reimbursed, whatever it is. So it's having that kind of clear-eyed vision of what, not just we're going to build a product that's peer-to-peer, but actually what that looks like, what that feels like to the people that would use it.
And you pulled out a couple of things, what it feels like, what it looks like. What are some other, I guess, constituent parts of a good North Star?
Well, you're the expert, Toby. Why don't I throw this one back to you?
You can't play ping pong with this. So I think there are elements that play into it. I think there needs to be an articulation of the value you're providing to customers. So this shouldn't touch on features. Is my view on it. People can argue, but I don't think a North Star should touch on features and how this is done, but it should pull out what the customer is trying to achieve and how long term you're going to try and, I guess, provide that value to the customer. It probably points out the problem that you're trying to solve for a customer. You might not be solving all of that with the first iteration, but that's the point of a vision, isn't it? It's not something we're doing at once. And it should also say the customer. I think we've got to be clear on who we're doing this for, even at this early stage.
Yeah, and I think you started to kind of touch on the framework that I was just going to chuck out there, but I was hoping you were going to come in with the same thing, which is the PSV framework. I think is one of the things, and this isn't necessarily something that you need a template or a tool to help you with, but certainly when we're starting to develop propositions with people, we would always say that the important things to highlight are the problem that you're addressing, the solution that you're proposing, and the value that creates for the people that are going to be using it. And I think, if you're going about setting out a North Star, you can't go too far wrong with starting to think about those things.
Yeah, no, I think that's a really nice way of getting into it. So I guess we've talked a bit about the kind of customer there and how we're kind of, I guess, satisfying some of those elements. One of the things we really talked about before was a bit of kind of, I guess lifting the bonnet on it, letting people see beneath the kind of inner workings, and particularly Friendsurance have managed to give that kind of transparency. How do you encourage transparency in this space, do you think?
So insurance is an industry that feels like it's inherently a closed book. So if I asked anyone, how is your car insurance calculated? I'm not sure that many people would really know. And being somebody that's worked in an insurance organisation for a number of years, I'm not sure I know, fully how it works. And that's just what people expect from insurance, which is this kind of black box that information goes into and a price comes out of, and then there's a level of opacity to it. I think if you're going to be really transparent, it comes back to trust. It comes back to what we said earlier, which is I trust you with my information, and I trust you to do the right thing. But vice versa, I think the insurance company should be, we trust you to be able to see the processes that we're going through, and actually we trust that you'll find the things that we're doing, or the kind of mechanisms that sit within us, and within the things that we're doing, you'll find ethical and understandable. So I think when I think about the way that kind of a peer-to-peer model might work and how you kind of get that transparency, it's almost like you would only, you'll provide information that you expect to get back from the other peers. And I was thinking about this, and I was kind of thinking, if I've always got a strange analogy. So I was thinking about taking my dog to puppy class, and I was thinking, if I take my dog to dog class, one of the things that I would be okay to be asked is whether or not my dog is safe. Is the dog going to bite my dog? And I'd be fine providing that information, because I would expect that information back from everybody else. And I kind of think that's the same with peer-to-peer insurance here, is that I'm going to be honest and I'm going to be transparent because I need and expect that honesty back from everybody else that's involved with the transaction. And I think this is something that, regardless of whether insurance companies are going down the route of peer-to-peer, they should think about, which is insurance companies expect full honesty and utmost good faith from their insured customers, to make sure they're building that trust and some of the things we talked about earlier, which is, dwindling levels of confidence, increasing prices. They're going to want a little bit of that back. They're going to want some of that transparency and honesty back. So, yeah, I think, this is not an easy one to answer, but I think it really comes down to, being honest with each other and having a level of expectation about what I give to you, I expect to get back.
I think that's a really nice way of spinning it around. You made the point about it being a very confusing thing to work yourself through. There's a stat out there, I think that something like 58% of Americans would rather sit in traffic or queue than go through an insurance process.
Exactly.
Because they just don't understand how it works. So it's such a nice point to bring out.
And I don't think we're highlighting anything here that insurance companies probably don't know. But I think framing it through peer-to-peer insurance, where there is a necessity to share specific information, if you go down the peer-to-peer route or not, there's something to be learnt there, that actually people have got much more trust when there's a level of reciprocal honesty between two parties. So it sounds easy, doesn't it, Toby? But how do you go about building this? And I think particularly, how do you go about building something like this all at once? So if you were going to launch a peer-to-peer insurer, how would you do it all at once?
Well, the simple answer to this, and I think you've probably preloaded this to make sure I come back to this, is you don't. You don't go out there and build this all at once. You've got to take your time. You've got to level up. You mentioned at the start the kind of North Star, the vision. That's a really great first step. So you set that out. But we're not trying to deliver all of that at once. So once you know that, you know your customer, you know the problem you're trying to solve. Any problem has a number of kind of needs beneath it, an emotional, social, it might be actual process problem. You want to prioritize those and start thinking about, for your customer, what do they want? What's most important? And if you solve something that's really a big problem for a customer well, it doesn't need to have all the bells and whistles that you're going to need beyond it. So you want to find that problem, come up with a solution, test that solution, change that solution, iterate it, because it's going to change 20, 30, 40 times on a journey of 2 years, and start building in more complexity once you've validated that you're solving those customer needs and providing that value. This should be a process. It might take you three months to go from a problem to a solution and have a kind of basic, simple product in the market. It might be something that's very manually operated. In the past, I've built solutions for companies where I'm the kind of tech behind it. It all flows into kind of my inbox or my phone, and they feel like they're dealing with an agent, but it's in fact me, which probably for them is a very bad thing. But it's much cheaper than building a system that sends it to the right place. So I think this is all about prioritization, kind of building small products, piecing them together, getting the data validation you need on the journey before you launch something all singing, all dancing.
I think you're right, and it's I guess a fundamental principle of innovation, which is you can move fast and break things with inverted commas, but it still doesn't mean do everything all at once. There is a sequence to some of these things, and like you say, it's a relatively logical sequence to go through. So I think that's super interesting. So I guess, Toby, wrapping that all together, thinking about what we've talked about today, what would be the key takeaways for you?
So I think I've been a bit rambly today, is how I feel.
It's all right, we all do it.
When I distill it down and thinking about it, where I come to is, I really liked your point around expectation of we have expectations of our insurers and they have expectations of us as customers. But if I act responsibly, I want rewarding for it. So this element that Friendsurance and a lot of peer-to-peer insurers do of refunding kind of unused contributions from claims, I think it's such a good point because it pulls out that point. It's not necessarily about refunding me. It doesn't always have to be money, but it's that point of if I act responsibly, I want some reward for it. I don't want to be taken for a ride. The other point that I think's really important, and whenever it comes to new things, people want to put something out there quickly. Don't do all of this at once. Take your time. Be measured. Don't take too much time. Like caveat to that, you've got to act now. Context is around, and we've got to move quickly. But don't try and do it all at once because you just load your risk up, and you can potentially spend a lot of money and make a mistake.
I think that's really good. And I think as we've gone through today, I guess my key thought as we wrap this up is, and I can't remember if you mentioned this earlier or if it was something we talked about as we were planning for this podcast, but there's something about the history of insurance here that kind of stands out for me. So as we think about peer-to-peer insurance, it kind of goes back to the very earliest days of Lloyd's coffee shop and ship owners getting together and pooling risk and actually sharing the risk amongst each other. That feels like this is bringing back, is that feeling of, do you know what, we've all got something to lose or something to kind of something that's at risk, so why don't we get together and actually minimize that risk amongst us? And I really like that. And I think, again, it comes down to this piece around transparency, is around, everybody involved in that transaction, when I think about, the history of insurance, understood where their money was going to, who was holding the pool, and what was going to happen to that pool if claims were made or not. And I really feel like, regardless of whether or not you're pursuing peer-to-peer insurance or not, there's a big lesson in there for insurance companies to understand, which is, the history and the foundations of this business were built on that level of transparency and trust. And getting back to that, I think can only benefit the insurance industry.
Yeah, I think that's a lovely note to end on. That simplicity is key to it all. It
is, and I'm glad we've ended on a relatively normal note there, because we normally end up going off on a bit of a tangent.
Agreeable as well.
Yeah, agreeable. We've agreed on something. Yeah. Well done to you, Toby. We've agreed on something. So, okay, that's it. Thank you very much for today. I really enjoyed that discussion, and we'll see you back here for the next one.